I think you're good to go. Good to go, Jam.
Okay. Good morning, everybody, and welcome to the FinTech Association's ESG Series. My name is James DiBiasio. I am co-chair of the Wealth Tech Committee, and I've been helping organize what is the first of a series of events looking at the role of FinTech and technology in ESG for financial services. This is a growing topic, a lot of angles to it, much complexity, and so we are going to be releasing a series of events exploring different angles of the ESG story and what FinTech can do for it. The FinTech Association is a nonprofit, members-driven organization representing individuals, startups, enterprises, all around advocacy, collaboration, and education around FinTech. And we welcome anybody who's a member of the organization who hasn't been working on the ESG task force. Feel free to join us. And I'd also like to thank this morning's event partner, the Association of Family Offices in Asia. So welcome to your members as well. Today we're looking at the role of blockchain technology in carbon markets and what some of the startups around the region are doing to help grow this market and to provide services for investors and other financial services organizations. So I will now hand it over to this morning's moderator, Hugh Madden, who is co-chair of the Blockchain Committee at the FinTech Association, and also group chairman at BC Group. So Hugh, why don't you introduce your speakers and the topic, and I'll come back to you at the end of today's session. Thank you.
Thank you, Jam. And yeah, as Jam mentioned, I'm the CEO of BC Group, and BC Group is the owner of a digital asset powerhouse called OSL, and we're a listed company, main board listed on the Hong Kong Stock Exchange. And so we have ESG requirements that come from being listed here in Hong Kong, and they're slowly getting a little bit more hands-on every year. However, our staff wanted to rally around and do more than our mere listing requirements, basically because it's something our staff wanted to do, and we feel it aligns with our company culture. So at the start of this year, I went to Davos to understand these sustainable development goals and how the world was shifting in this regards. And I found in Davos at the start of the year, it was the top agenda by a country mile. It was on everyone's lips. It was on every panel, and it was a huge and important theme. This, of course, was just prior to COVID eclipsing the matter temporarily. That said, we continued throughout the year to want to learn about it, improve our own ESG capability, and give ourselves a carbon neutral footprint and so on, using blockchain as we're a digital asset company. And through that journey, we found quite a number of amazing companies and a number of amazing individuals who are doing a lot of work in this space with relentless energy, I'd say. So I'm really pleased and humbled to present to you today a panel comprised of Vanessa Grellet, Executive Director of Global Partnerships and Alliances at ConsenSys, Dr. Eva Law, Founder and Chairman of the Association of Family Offices, Gemma Green, Founder and Chairwoman of Power Ledger, Max Song, Co-Founder and CEO of Carbonbase, and Dave Sandor, Co-Founder and CEO of All-Infra. So I'll just ask all panelists to just give a short introduction to themselves and what drew them to this space, starting with Vanessa, please.
Hi, everyone. My name is Vanessa Coleman. I've been working for ConsenSys for about 4 years now. For those who don't know ConsenSys, it's one of the largest blockchain companies in the world. It focuses on Ethereum. And as I started my journey at ConsenSys, I developed our social impact practice, which morphed into a non-for-profit called the Blockchain for Social Impact Coalition. Prior to joining ConsenSys, I worked in financial markets and notably for the New York Stock Exchange for almost 10 years, where I discovered ESG and also impact investing. So I've been an impact investor for a long time. I also headed up a next gen group, and I started their impact investing group. It's called the Nexus Impact Investing Group.
Thank you. And Dr. Eva Law.
Okay, hello everybody. Let me maybe briefly introduce about the Association of Family Office in Asia. Actually, we are a professional society that distinctively gathers single-family office, also other multifamily office and co-investor in Asia, and also other related society in the region. AFO offer a range of consultancy services, and we organize activity to facilitate collaboration and co-investment among the very closed circle. We have our mission task force in promoting the adoption of sustainable development goals that is advocated by UN, by the family enterprise, and facilitating more investment towards ESG impact and also responsible investing within the family of circle. And my personal company, CG International, actually it's the management company that very active investing in impact projects and facilitating co-investment with other family offices as well. Yeah, that's my brief introduction.
Thank you. And Gemma.
Thanks. I'm a co-founder and the chairman of PowerLedger. I came into ESG actually working in banking in London. I was working in mainstream finance and did a leadership program and had to choose a project, something that I was interested in, and looked around the offices of JP Morgan in London and thought I would introduce recycling facilities, which I did. And realised how much of a struggle it was to get people to do things that were essentially good for all of us. But at that time, the banks were realising the need to incorporate ESG considerations into their lending and financing activities. And I had since gone on and done some studies in sustainability to move into this field and was chosen to help set up JP Morgan's Environmental Social Risk Management Unit, which I worked in for 6 years, so looking at big lending and big financing, you know, across a range of sectors like mining, oil and gas, mining, and heavy manufacturing and power. And I went on and did a master's in sustainability at Cambridge, and felt really compelled to come home to Australia, but really that my exciting career days in ESG were over. But between leaving London and coming back home, I did a bit of hiking and got this idea in my head that I wanted to build an eco-village. And when I got home to Perth, I shared this idea with a professor at Curtin University, and he said, oh, you should do a PhD in this subject, and it'll better inform the design of the eco-village. So I embarked upon research in disruptive innovation, looking at electricity markets, and designed a solar and battery system for an apartment building. And I couldn't find any software that would create effectively a trading environment within the apartment building where people were allocated units of electricity from the solar and battery system, and if they didn't consume it, they could trade it with their neighbours. And by chance, I was introduced to some people that worked in the field of blockchain in 2016 and found some projects that were doing just that actually in New York. I thought this is really exciting, and so we set up PowerLedger in May of 2016, 4 years ago, with two use cases in mind: trading of electricity peer-to-peer across the grid, and trading of environmental commodities. And our vision is around leading the global democratization of energy movement, where people have access to energy and can participate directly in energy markets, and in doing so improve their lives and the lives of others, and to be a major contributor to transforming energy markets globally and impacting the lives of 1 billion people, which is obviously a very big, hairy, audacious ambition. But in the 4 years since we've set up, we've got more than 20 projects in 10 countries. So that's a bit about my background into ESG.
Oh, that's fantastic. What a journey. And yeah, I hear PowerLedger increasingly more in these top conversations. So congratulations there.
Thank you.
Max.
Yes, thank you guys, and pleasure to be here. Start my video. I'm Max. I'm the founder of CEO of Carbonbase. So I think my key interest in climate change came actually at a very young age. I grew up between the United States and China, and these are two very complicated countries. And I wanted to find a thing that actually China and the US could work together on. And so, short of an alien invasion, I thought that the planetary scale problems of climate change would be the place to really focus. I was very lucky to go to Brown University, where I had a very entrenched sense of the role of sustainability in our society. And then later on, I went to attend the Schwarzman Scholars Program in Tsinghua, kind of modeled as the Rhodes Scholarship of China. And there I wrote my master's thesis on US and China green energy investment policies. In my career, I've worked as a data scientist in Silicon Valley, and more recently as an investor at a family office here in Hong Kong, where I helped them look at the emerging opportunities in blockchain and AI as sectors. And so today, we hope to use Carbonbase as an intro to accomplish several key things. The first is to really apply the global reach that crypto has been able to accomplish, with exchanges, the wallets, all of this sort of digital ID technology, into a rather opaque and obscure market, which is a carbon credit market. And second is to drive a lot more institutional and also individual capital into actually helping green our planet. So really resonate with what Dr. Green just mentioned of trying to increase the total people who can participate in the climate change effort, from the tens and hundreds of thousands to the millions, if not billions, in the near future. And thank you guys again for the chance to be here.
Thank you, Max. And Dave.
Thanks, Hugh. Great to be here. So, I'm got a financial background. I've been in Hong Kong for some time. We started All-Infra a couple of years ago with a focus on two things. One was to deliver access to investors to large-scale unlisted infrastructure, particularly in the renewable space, and also to build out a platform focused on climate-relevant data. And through our experience in traditional financial markets and in the carbon space, the climate space, we saw some of the efficiencies and gaps that exist in those markets, from provenance, quality of data, double counting, friction costs, even the ability for smaller investors to easily access these markets. And the underlying thesis was that everyone, whether you're a corporate, an asset owner, an institution, or an individual, you should be able to contribute to saving the planet and know for certain that whatever you've done, whatever you've contributed has had an impact, and you should be able to trace that impact in a verifiable and auditable way. And so that sort of brought us down the blockchain path and the development of All-Infra and All-Infra Climate.
Fantastic, thank you. So at BC Group, our staff efforts in this space, they weren't really driven from an investment perspective. They were driven from staff desire to a shared interest. But we were told again and again and again, as a listed company, your approach to ESG is a big consideration for your investors. Eva, in your experience with your clients and the family offices in general, how true is that? Are these matters front and foremost in the investment decision-making process, or is it more a checkbox that's done at the end, to look for any risks?
Yeah, I think the ultra wealthy are increasingly conscious of how they are perceived by the public and how their investment influence the society and the environment. So impact investing or responsible investing has become the prevalent means to contribute to a greater social and environmental benefit. And my company has many ESG investors who are mainly the next generation leader in wealthy family. And I see what they are committed so far. So I would say this really matter. And our house data reflect actually a very similar finding with the survey that was previously shared by UBS and Captain Wow, where roughly about 60% of the family office are very active or expect to be very active in impact. And roughly close to 50% say impact investing is a better use of capital. And they believe this actually will have greater social impact than traditional philanthropy. So you can see ESG does matter in their investment decision, and their behavior are changing. Actually, we are quite committed, very committed to drive this trend up to a new level, because we see the Generation Y who are coming of age, and they are going to have more say, in managing the family asset. So that's really important. And actually now we already notice a very clear trend, an increased focus on impact investing within those very purpose-driven family office. Yeah, that's our observation.
Right. And so, Vanessa, in all of your work in impact investing, is it kind of a niche boutique for investors who are a bit philanthropic, or is it becoming kind of a mainstream concept and concern?
So I think it's totally going mainstream with different levels of maturity per region. I would say that Europe is leading the way in that space. The US has seen a great uptick in that type of investments with large institutional investors like BlackRock or other pension funds that are really want to invest in liquid assets in ESG portfolios. Currently, you see that the current administration is putting together some interpretation of the law which would limit this current trend. But what happens is there's a generational transformation. People's consciousness are being raised, global communication and technology allows for that, and availability of those investments is widespread. So I think ESG investment has a bright future and has done very well during this COVID crisis. So it was interesting, I was looking at the rate of return, so they were less volatile than other stocks during the crisis. Of course, they were heavily skewed towards technology firms, but also short on the energy stocks. So, the whole combination made that investment very worthwhile. And we no longer see this as a niche investment for people who are willing to lose money, as it's sometimes perceived, but as a worthwhile investment that has very robust returns.
Right, interesting. So when we embarked on this, one of our primary interests was environment, and but we quickly learned that there's many factors to consider, and we should do a materiality assessment and figure out, which sustainable development goals are relevant to us, and we have the most ability to impact and influence. The next thing for us, being a listed company and audited by a Big Four auditor, the next thing for us in our naive kind of approach to this was, okay, so if we've done a materiality assessment, we're going to make some claims, and then presumably we can get our auditor or someone to come in and check and provide assurance, and on that. And we quickly learned that there's no such thing. You can't get an insurer to look at your ESG claims. There's a number of best practices and so on, but there's no checklist or guide here, and it's still quite an evolving space. If I can start with you, Gemma. With all of your projects, assurance, quality, how big a factor are these factors within your projects?
Well, what we're finding is that because electricity markets are changing so significantly, from essentially a centralized electricity system with large generators bringing electricity to people's homes and businesses now, with distributed renewables factoring a large proportion of the generation output and also causing very significant problems in the electricity grid. The incumbent retailers are looking at what are the commercial and business models that are going to underpin their existence into the future, and it's not what it has been for the past 20 years. It's definitely changing. So perhaps they're making less money on selling electricity and they're instead selling solar panels and batteries and making up the margin loss there. Or perhaps instead of procuring services from the market, they're procuring it from your customers' batteries. And how do they actually do that, productize that? So I think that these things are very important to think about from a financial perspective, but also about responding to what the customers want. And customers are showing increasing appetite for renewables for ESG reasons and also to save money on electricity. So I think that tailoring the products which empower customers and allow them to have more choice is something that people are responding to, recognising, for example, in Australia, 30% of households have rooftop solar. And in places like South Australia, the high uptake of renewables is driving the fast adoption of batteries. So they're becoming, and you know, that's one of the places where the most household batteries are being sold in the world right now. And this strong demand is yes, about saving money on electricity bills, but also there are big drivers around ESG. And also, I think increasingly localized energy is becoming something that people want to support. So peer-to-peer trading, you could do that. Peer-to-peer trading of electricity, you can do that from long distances, but actually where it delivers the most value is if you have it localized within a community, so you're not pushing electricity up the distribution network and transmission network, which actually, these reverse flows of electricity cause big problems in the grid, and the creation of localized electricity markets actually can deliver system benefits as well. So then you don't have to augment the network as much, and ultimately that will deliver low cost and clean electricity. So I think there's a range of factors, but certainly ESG is a big component of it.
Right, and so Dave, as a client or an investor, if I'm looking at either purchasing some energy or if I'm looking at buying some carbon offsets to offset my own footprint, what role does blockchain have to play in assuring the consumer that the asset is correctly represented and the quality is there? I mean, because there have been a number of scandals in this space, in decades past.
Yeah, look, absolutely, that's right, Hugh. I guess when sort of we think about how people meet their ESG goals, you've either got, I suppose, changing behavior or purchasing product. And what you pointed out was, meeting some ESG goals by purchasing products. So by purchasing an emission reduction, a REC or something like that. And if the underlying data for those products is bad, so whether it's, how the amount of CO2 is calculated, megawatt hours of energy, if the underlying data for that is bad, then the product has very little value, right? Because that's what you're relying on. You're relying on that data is good, that it hasn't been used before. And over the life of, say, issuing an emission reduction, so a project that issues an emission reduction, there's data collection at every stage. So from the creation of the PDD through to ongoing monitoring of that project. And where we see a great fit for blockchain is really in the measurement, reporting, and verification area around the project. So depending on the asset, you can capture device level data, can be recorded in an immutable fashion. It's easy for verification for buyers, for third parties, for assurance firms. And then of course, the nice piece is if you can digitize the end product, then you can permanently link that underlying data to the end product, which means that when something's retired, so when you've actually made a claim and used a product, everyone can be certain of the underlying data that's been taken out of the market. So from a buyer's perspective, there are a lot of benefits. And then from the project owner's perspective, think about it from streamlining their processes, right? There's a way to implement blockchain in terms of recording data such that that measurement process becomes less cumbersome, it becomes quicker, it becomes easier and less costly. So I think there's benefits on both sides of the market for implementing some sort of blockchain technology for data collection and then pinning that data to the end product. Right.
So if I understand correctly, I can purchase some carbon offsets, and with the use, if blockchain technology has been applied to it, then I can be very satisfied that's mapping to real world data, and that no one else has claimed that same data already as part of their offset program. So no rehypothecation, I guess. So as a firm looking to understand my carbon footprint, I guess there's two parts to it as well. There's assessing my own carbon footprint, as well as, of course, wanting to use quality offsets to offset my footprint. Max, is there any, what's the other side, I guess? How does a potential investor gain confidence that the offset claims, or sorry, the footprint claims of any particular firm or individual, how do we gain confidence that those numbers are true?
Yeah, thank you, Hugh. Just to echo what Dave's saying, I think that the traditional market of carbon offsets has largely been a very manual process. And as we move into age of IoT and data science, we can actually start to gather more information about what exactly is happening inside the supply chains and also the business operations of these companies. And I think on one aspect, being able to create more accurate real-time measurements of companies is scope 1, 2, 3 emissions, specifically the sort of concentric rings of how much do you consider your personal footprint is actually really, really important and valuable. And I just want to sort of expand on this question a little bit more and talk about the way that people have actually created quality offsets and also what quality means in this context. So as you know, the carbon offset world actually is a voluntary market world, meaning that the participants are doing this out of their own personal activity. And we see huge companies like Apple and Microsoft committing to become carbon neutral. But really what they specifically mean by that is that they have to first assess the company's total footprint. And then they have to try to reduce as much as they can. And finally, of the ones they can't, sort of buy offsets from. The offsets that actually people are buying from have to be certified by several regulatory bodies. And these regulatory bodies are sort of NGO, quasi-NGOs in the space. One thing that we've sort of seen actually talking to a lot of offset developers is that there actually is a really interesting potential to apply measurement, data analysis, remote sensing actually at the point of offset generation, and being able to actually capture more information about what is happening at the local context, either in the Amazon rainforest, or it's at a power producing plant, or actually at a cook stove distribution center. To be able to record, the sort of decrease in offsets as well, and authenticate that that offset is real, it is measured, and finally that eventually it would be transferred to be recognized by some company. And so I think hopefully what we can see more of in the future is actually to use blockchain as this sort of information passageway, and to solve the problem of the offsets, generation, origination, and distribution being opaque and largely handled by sort of unknown actors. And so that we have a much more transparent market, which hopefully will also drive more investor confidence to both invest in offset projects as well as to buy them at the end.
Right. I guess outside of assurance and quality of that data keeping, the other area where we hear blockchain being applied again and again and again is tokenization. So perhaps, Gemma, if you wouldn't mind starting, so why would we be tokenizing energy units or offset instruments as opposed to just listing them on a commodity exchange somewhere?
Well, there's a few reasons. Firstly, faster settlement. I think blockchain is really great for microtransaction settlement and instant settlement, because the record of the transaction and the physical settlement of a digital asset and the payment associated can be one and the same entry on the blockchain, whereas using traditional settlement, typically what will occur is a reconciliation process that takes time, and it also involves manual processes from staff, so it's expensive. So I think that the ability to drive cost efficiencies in the settlement process is one of the benefits of using the blockchain and tokenizing it, and the feature is faster settlement. Also, I think for smart contracts inside the tokens can facilitate more complex transactions, and in our virtual power plant product, there are many different income streams for a battery, for example, spot trading, frequency control, ancillary service trading, network services. So there's many different counterparties, and what the smart contracting functionality inside the token can do is optimize the use of the battery for the greatest income, which will drive better return on investment as well. So that's another feature. I think the other is cross-retailer trading as well. Normally, if you're going to have multiple counterparties trading with each other, you would have an intermediary that would sit between them, but using the blockchain, it's possible for them to trade directly between each other and settle. And so I think that you can create greater market size using the blockchain and tokens. And then the final thing is enhanced auditing. So every transaction that is created on the blockchain and obviously using the tokens is recorded, and that provides a really secure and auditable trail that streamlines any disputes, and as well as preventing mistakes that could be caused by manual handling and record keeping.
Right. And so to follow on from that, Dave, I understand All-Infra batches up data and tokenizes offsets. So why did All-Infra choose that approach as opposed to a traditional, carbon market?
So, I guess our first focus was to collect data in the right way and then to be able to package that up into a product. And the tokenized system, I guess, is a very neat way of tying that underlying data to the product. It means that when that product's traded, when it's retired, you can trace where that data's gone. You can trace when it's been used. You can be sure that no one's used that data again. So that was one of the key reasons. It allows you to also have a product that's traded without an intermediary. So in theory, in a particular market, particularly in a voluntary market, you might be able to have the seller transacting directly with the buyer and take out a number of intermediaries. It makes it easier to maintain a register of ownership. So all of those things together with all the transparency and tradability functionality that Gemma outlined, are really the benefits around tokenizing a product. And then I think separately to that, if you just look at the application of blockchain generally, there are many applications for it in the climate space, even when you look at it from a broader macro perspective and you roll all the way up to nationally determined contributions and what countries are doing in terms of helping each other and cooperation in terms of achieving their goals. Recording transactions, recording outcomes on the blockchain is one way to make sure that accounting is done correctly. So I think there's applications for blockchain and for tokenization all the way from the micro level at the asset, all the way up to the multinational level.
Thank you. And Vanessa, did you have anything to add on this topic, given your role at ConsenSys?
So I think we see a lot of companies who want to offset their carbon footprint. I think what's important, and they need absolutely the data that's relevant, that currently the carbon markets are a bit fragmented. And so I think the key to the success of these enterprises is a few, sort of key stakeholders coming together and committing to the process, committing to standards, and I think that's the avenue by which in 2012, I was involved in shutting down actually a market called BlueNex, which was a carbon trading platform, and it was an extremely complicated operations. So you can imagine doing trading of carbons globally today gets even more complicated given the geopolitics and the lack of consistent data, transparency regarding the credits.
Mm-hmm. So in our own attempts here, we got a rough feel for our own footprint, and then we looked at what the financial implications of offsetting ourselves would be, and I asked for some friendly advice from All-Infra. So that's good. What's if I want to use blockchain, carbon credits to offset our footprint? What's the market price? And the answer was, well, it could be anywhere from $1 per ton to $700, and actually other factors that there is different quality of offsets and different types of offsets within that market. And it turns out that even within ESG, it's not, even within environmental, social, or governance, they interplay. And in fact, the S and G factors of an offset instrument play very heavily into its appropriateness, and fit for your corporation. But so on those other matters, Eva, outside of the environmental factors, how significant are the social and governance that you see in Asian investing, high net worth and investment thinking in the current time?
Oh, okay. I think good corporate governance actually promote investor confidence. Governance cover a broad range of corporate activities, include the board management, the structure, the company policy standard, the information disclosure, auditing, compliance, everything. And I think investors want to know that a company, for example, the company's accounting is accurate and very transparent, and that its business practice are also ethical. That's what they like to see. And of course, they will expect the company have policy that will also engage or encourage more shareholder engagement, and that will end up help more investor interested investing into the company. And for many of our family office investors, they always screen the governance practice, what they use in the negative screening. They want to use this to root out those companies that maybe the policy or practice expose them to some unacceptable level of risk. While when they are doing the positive screen, they hope to really through the screening to identify the star company that has strong and transparent governance policy and practices. If you guys follow about the market, you'll find that corporate governance issue always make headlines on a regular basis, like gender diversity or gender equality is another very high-profile governance issue, and many institutional shareholder investors are now demanding better representation of women on board or on executive level, and maybe also equal compensation or career promotion access for women. And you can also see research, indicating a better balance of men and women in the workplace can really deliver return with less mortality, and also making gender diversity profitable. It's good for the company itself and also for the investor. And about the social side, why investors should care about the company's social impact? When investors look at the social criteria, they always interested in knowing how a company manages its relationship with its employee, the supplier, customer, and in community where they operate. So family office investor will always also use the screening, to see about the social performance. For example, the negative screen, they use it to root out those companies that are also expose them for an acceptable level of risk. While the positive screen they want to find company that really perform very well when it comes to meeting, for example, international labor standard or expectation for employee or customer or the community relationship. And to us, AFO, we believe social factor are really helping to create return for investor, while at the same time it's strengthening the organization, the family, the community, and helping society meet some of its very toughest challenge. And research also indicate and showing companies that are considered as good corporate citizens perform better financially than those they are not. So that's our view.
Thank you. And
Eva, I just wanted to echo the sentiments of what you just said then. Both, it used to be that these things were seen, ESG performance was seen separate to, or at least E&S performance was seen separate to financial performance, but now I think they are intimately linked together. And to respond to your point, Hugh, about the the diverse landscape of performance of ESG. Like, for example, in the carbon credits and renewable energy certificate space, the voluntary space, you can get a whole range of quality around the validation of the existence of the credits and whether there are social dimensions as well in terms of facilitating economic development in developing countries and things like that. And gold standards around those means that they are more valuable, and ultimately what that means is, it should mean is that the project developers receive more income for those projects for making them more bona fide. So I think not all green things were created equal, and we've heard the terms greenwashing, akin to whitewashing. And I think that Eva's point is that investors are becoming far more discerning and sophisticated in what they're expecting and how they do their due diligence. But I also think that consumers in the market buying products and services are becoming far more discerning as well. And you can see that in electricity, where it used to be okay that I just had a renewable tariff, but now customers are wanting far more granularity. And we've partnered with an electricity retailer in France called Equateur that's allowing customers to choose their own energy mix. So they specify, I want solar from that farm, I want wind from that farm, I want the rest of my energy from my local community. And using our platform, they're able to match the output of those generation assets to the consumption within the same interval, so that they're not just buying some renewable energy certificate from 2 years ago from another country. It's actually originating from France, and they know exactly where it's coming from. So I think that, and you'll see that across a range of different products that have sort of ESG bents, where customers are now being far more discerning and scrutinizing the validity of the claims being made.
Right. Thank you. And is there any more comments in general from the panel? But we are running short on time. I need to move over to 5 or 6 minutes of questions. And then we've got a series of short presentations from Power Ledger, All-Infra, and Carbonbase. So any more comments? Vanessa, Max?
One quick comment just about governance. I think, just to make it really quick, I think that the blockchain actually enables a different type of governance than we're historically used to. Because traditionally, as a shareholder of a company, we don't necessarily get to vote that actively in shareholder meetings. We don't really participate that well. Especially with this whole DeFi wave that's happening right now, the ability to earn governance tokens of a particular protocol and actually then be able to participate directly in the management of that protocol is super empowering. I think that type of retail engagement, into the organizational layer of the company is one that I hope can spread more deeply into many other different sectors. And we start to see using blockchain a way for individuals to participate in the responsible governance of the organizations that they're users of, clients of, and also shareholders of. Thank you.
Right. If there's no other comments, then perhaps we'll move to 5 minutes of question time. The question time will be held on a hand raise basis in Zoom. So to raise your hand, click the participant button at the bottom right of your Zoom window. You will see a raise hand button next to unmute me button. Press the raise hand button and we'll be notified. If you've dialed in via mobile phone, press *9. And then when your question is selected, we'll read your name back and unmute your line. And you press it's *6 to unmute your line. So we'll stop there and ask for questions. Maybe we'll start with a question in the chat from Jemma. Jemma, is there anyone in particular you'd like to answer this? But basically, obstacles to adoption of blockchain in carbon. Do companies really want transparency?
So I can take a stab at that, I suppose. And I think the answer to that question is yes. If you speak to the rating agencies, some of the other administrators in different markets, whether it's on the energy side or on the carbon side, you'll find that there are in the future, or there's going to be benefits to the more transparent you can be. And I think it's going to be a differentiating factor going forward. Now, it doesn't mean that you have to be fully transparent. It doesn't mean you need to show the market everything. but it means you can put something up that's provable. So can you show to a regulator or an administrator the underlying data, and then the broader market can be comfortable that that data is there. But I think you'll find that in the future, people are going to be rewarded for greater transparency. So certainly on the corporate side, there's a push to move in that direction.
And just to add on there after Dave's comment, I think that's when these big companies like Apple and Microsoft make a commitment to become carbon neutral, that actually is a very serious commitment to both themselves and also their shareholders. So I think, you know, they probably would want to invest a little bit more in order to make sure that the credits they source are legitimate and come from a reputable source, and that the offsetting process they use also is correct. Because in some ways they're actually putting their reputation on the line to say that this is what I'm representing, and they probably need to have a lot of vested interest to back that up.
I would just add to that sometimes it's not just about, you know, the perception around like being carbon neutral, for example, or being 100% renewable energy autonomous. It's actually about facilitating the development of those resources locally. So it's possible for companies to buy whatever energy happens to be in their market and then just add renewable energy certificates on top of it and claim they're 100% renewable. But increasingly, the big brands, the multinationals, are wanting to actually procure power purchase agreements and offtake that electricity, literally, not just virtually. And what that's facilitating is the development of more energy assets, very deliberately by them. They want to actually be supporting the industry in a more meaningful way. And I think that builds trust with their brand, because even though with the best quality credits, you can rely on that they're legitimate, it doesn't actually necessarily drive the creation of the renewable energy industry in the markets in which those companies operate. And that's something that is another kind of aspect of their sustainability strategy. And it builds trust with their brand and also achieves some bigger overarching objectives that they have in creating sort of secondary and tertiary benefits for the communities in which they operate.
Right, thank you. In the interest of time, we'll go for one last question. It's what about the availability of renewables? Are there enough?
I think that is there enough energy? Well, 1.3 billion people don't have access to electricity at all. And what that means is they don't have refrigeration for medicines. They don't have the ability to create businesses that can improve their lives. And so the answer, I think, is no. When everybody has access to electricity, I think there will be enough. And when everyone has access to clean electricity, that doesn't mean that, and also affordable electricity, I think that then there will be enough. And at the moment, the transition that we're in with renewables is actually causing problems in the grid because of the way that they're being deployed. And there needs to be better pricing for networks to reflect localized electricity markets, and also to get the consumption and generation close to each other, not being taken long distances, which necessitates more grids which are very expensive. So I think that there is not enough energy, and there's not enough energy in the right places, and it's eminently feasible for us to achieve that. And I think it's a poverty alleviation objective. It's not just a thing about charging my iPhone.
I want to answer to this. So the non-renewable energies are not going to be enough in the coming years. So there is no choice but for us to transition to renewable energies and clean energies. So what is sure is that we have a finite number of the current commodities that we use, and we have to find other solutions. So better start early than later if you want to include everyone.
Well, there's some really great questions coming through, and frankly, I'd be happy to stay here and listen all day, but our schedules won't permit, and we do have some presentations from Power Ledger, All-Infra, and Carbonbase. But first of all, I would just like to give a big thank you to all the panelists You know, in today's work from home 24-hour situation, it's incredibly hard to find time for this sort of call. So thanks for your preparation and thanks very much for your time. Now we'll move over to a series of 3 presentations, starting with Gemma. Gemma, would you like me to share screen or would you like me to play your deck?
Would you play my deck and I'll just ask you to turn the page?
Okay, all right. I will just open that up, so bear with me. Apologies. All right, we'll be here in any second.
Thank you. I'm just going to give a little overview of Powerledger's business. I mentioned how we set up already. If you go to the next slide, Hugh, I mentioned earlier, centralised electricity markets have remained unchanged for pretty much a century, with large power stations, transmission lines and distribution lines bringing electricity to people's homes and businesses. And if you turn to the next page, you can see the emergence of a distributed energy market. So that's distributed rooftop solar, some large generation of solar and wind, which doesn't just change out traditional generation because it's variable. And so there's a need for base load and dispatchable electricity. And dispatchable electricity is really key to this new energy paradigm. And that can come from sources like gas-fired power, but also batteries or even hydro and in the longer term, hydrogen as well. And if you turn to the next slide, the rise of distributed renewables is causing this headache in the grid. It's called the duck curve. And basically it's where you don't have much consumption during the day, but that's when the rooftop solar is generating most of the electricity and causing reverse flows. And then at night, you don't have solar, you have a lot of demand. So there's a mismatch between when renewables are generating and when the consumption is occurring. And this causes problems on the grid. So this is a situation, you're actually looking at, this is the West Australian grid. And this is the duck curve, although it sounds cute, is actually causes really serious issues, including voltage and reactive power issues, grid balancing and frequency control issues, and challenges regarding the scheduling of base load generation. So it's nothing to quack about. And without action, this is leading to brownouts and blackouts in the worst case, and in the best case, something called curtailment, which is a fancy word for throwing energy away, or alternatively having expensive upgrades to the grid to deal with the reversed flows. So there's a whole range of problems that are caused by renewables in the grid at the moment. And this is largely driven by the feed-in tariff. So it's encouraged people to put a lot of electricity on in rooftop solar, but there's not enough consumption during the day. And you see this in markets where there's a high penetration of rooftop solar. If you go to the next slide, but we're starting to see innovation in grids and networks around dynamic pricing of grids, agile pricing of grids, nodal pricing and congestion pricing. So think about it like Uber. When you have peak events, the price of using an Uber taxi goes up, and it's a similar thing for the network. So rather than it being a stable price, regardless, that it starts to become more dynamic. And these are some of the places that are innovating around this. And we've done a lot of research on this topic, and clients that are looking to do peer-to-peer trading and wanting to adopt change their tariffs to make the market more fit for purpose for distributed renewables are looking to the innovations in these regions. If you turn to the next slide, essentially PowerLedger's software provides a market-making mechanism, which is about making renewables more scalable, but without these headaches that I mentioned. And also it allows retailers, electricity retailers, to create new products and services for their customers that can capture new value in this market. And if you turn to the next slide, our platform is broken into two broad categories: the trading of electricity and the trading of environmental commodities. So we have XGrid, which is trading across the grid, UGrid, trading within microgrids. So that's apartment buildings, shopping centres, office buildings, virtual power plant, which is batteries dispatching into the peak and getting a return and providing services to the grid. Vision, which is tracking electricity and allowing customers to choose their own energy mix. And PPA Vision, which is for large solar farms and wind farms to manage the offtake of those with the buyers. And then within environmental commodity trading, Trace is the registry for renewable energy certificates and carbon credits, and TraceX is a marketplace for trading those certificates. And turning to the next page, I mentioned before, we have 20 projects in 10 countries, and these are some of our partners and clients, including, if you turn to the next page, clients in obviously Australia, the US, India, Europe. And in 2016, we had when we set up, we had a test case in Perth with 3 apartments. And now we've got projects in Thailand, Japan, and the US. And I think clearly disruption and network growth is happening, but we would very much like it to happen faster. But we can see the glide path starting to emerge. If you turn to the next page on the blockchain, I did cover these points off earlier around faster settlement using the blockchain, smart contracts, and what they can do in more complex markets, the creation of cross-retailer trading for energy, and also enhanced auditing capabilities. And I'll turn now to some of our projects. This is in Malaysia. We've partnered with CEDA and TNB, and this is a peer-to-peer demonstration project that showed how you can grow rooftop solar in a scalable way. We've actually got a webinar on this next week with Irina. If you turn to the next page, we have a project in Bangkok in Thailand with BCPG. This is the largest commercial peer-to-peer project in the world, and it's got 6 commercial buildings in Bangkok trading peer-to-peer electricity, and that's been going for coming up to 2 years, which is really exciting. And as a result of this project, if you turn to the next slide, we've partnered with BCPG and the Thai government, and they've set up a new entity called the Thai Digital Energy Development Authority, TDED. And with this partnership with PowerLedger, we've actually licensed the software to the country. The first project we're working on together is a 12 megawatt solar project with batteries at Chiang Mai University in the north of Thailand, as a part of a smart campus that includes peer-to-peer trading and virtual power plant trading. Turning to the next slide, we have a project, 2 projects actually with KEPCO in Japan, one for peer-to-peer trading that we completed last year, and we've just been finalising a rep trading demonstration project with them, which is a framework for KEPCO to provide renewable energy certificates to RE100 companies who are voluntary buyers of certificates as a part of their commitment to purchase all of their energy from renewable sources. Moving to the next slide, in India, we are working with ISGF in the state of UP, which is the largest and most popular state in India, to develop the regulation to enable peer-to-peer trading in the state. And they are the first government in the world to formally recognise blockchain as a mechanism to make energy markets more efficient. So we're very excited about this project and partnership. I mentioned, if you turn to the next slide, we're working with Equateur. They're a very exciting and innovative retailer in France. They've got 200,000 customers, and they're allowing their customers to choose their own energy mix. And I mentioned about that earlier in the webinar. And turning now also to the next slide, we had a project with Silicon Valley Power, which is quite interesting. It's a type of credit called the low carbon fuel standard. And this was the second largest electric vehicle charging station in California, which is powered by solar and is eligible for the credit. So as electric vehicles charge their cars, they can receive some income for the credits that are being used in the charging process. And our platform automated the measurement, reporting and verification process to be able to get those credits issued. In the next slide, our partnership with Clearway Energy. Clearway are listed on the NASDAQ. They've got 6 gigawatts of renewables in their portfolio. So they sell a lot of renewable energy certificates in the US, about $3 billion worth of RECs issued each year. But the trading of these is quite cumbersome and clunky. And I mentioned around the efficiency process using tokenized like renewable energy certificates, the trading and the physical settlement and the financial settlement can be one and the same entry. And we're partnering with 3 different ISOs or regions in the US to plug in our marketplace functionality, and we'll be going live with the POC this year. So that's very exciting. So that's, and then the final project I'll mention on the next slide is Renew Nexus, and that's in Perth, where PowerLedger is based. And we've got 3 parts of what's called the Renew Nexus project. Frio 48, which was a 2-part solar peer-to-peer trading trial. Loco 1, which is VPP modeling for the market in Perth, and Loco 2, which is happening now, which is a large battery, 670 kilowatt hour battery in a sea container that will allow 36 homes to trade with each other via the battery, and the battery will be part of a virtual power plant to the grid. And the first parts, Frio 48 and Loco 1 are completed. Loco 2 is underway. And if you turn to the next slide, the findings from those 2 parts was that energy trading was popular with participants, and it actually altered their energy habits. So it encouraged them to consume solar electricity during the day when it was cheap, and deal with the reverse flows and the grid issues that I mentioned to you earlier with the problem of excess renewables during the day. So I think that what that shows is that a market mechanism facilitated by peer-to-peer trading can help deliver scalable renewables. If you turn to the next slide, the summary from that project and also others that we're working with shows that our software shows that depending on the objectives of the clients that we work with, we design the projects to either reduce the cost of energy, balance local generation of electricity with demand, or incentivize the engagement of consumers, and develop pricing mechanisms. And also using our technology, it can securely trade and settle peer-to-peer markets and deal with the network issues from renewables, such as voltage and capacity constraints and network power losses, which ultimately can maintain and improve the system resiliency while scaling renewables. And just to wrap up, I mentioned our vision. It's leading the global democratization of energy movement, where people can have access to energy, participate directly in energy markets, and in doing so improve their lives and the lives of others. Thank you.
Wow, thank you, Gemma. And PowerLedger's really had some amazing accomplishments in really a very, very small amount of time. So congratulations.
Thank you.
Dave, over to yourself. I'll need to, if you wish to run the screen share, I'll just need to pass host to you. Please do remember to pass it back after your presentation. Actually, I'm not sure I can see how to do that. Yami,
do you want to just do it here?
Sure, no problems. All right.
1 second.
Okay. Is that clear to everyone? Can you see the screen clearly, Dave?
Yeah, I can see it, no problem.
Okay, all right.
So Look, today I'm going to give you a little bit of an overview of All-Infra, specifically All-Infra Climate. So All-Infra really has two core products. One is the tokenization of large-scale unlisted infrastructure with a particular focus on renewables. And then tangential to that, we've got a platform that looks at the climate space. And today that's what we're going to go through. So I'll talk a little bit about what we're about, sorts of problems we're solving, and end with a little tour of the platform. Next page, please. Here. So, the first thing is, I guess, what is environmental data? And that's what we focus on at All-Infra on the climate side, right? We see environmental data as anything that really allows a party to judge or measure performance from an environmental perspective. So think of data that's gathered to measure energy consumption, generation, water usage, withdrawal, discharge, waste production, disposal, hazardous waste, non-hazardous waste disposal, capturing of gas that's not flared from an oil facility, building efficiency, fuel consumption, those sorts of things. Now, the data that I just outlined, once captured, can be used across a host of use cases. So if you can just go to the next slide, please. So that data can be used for a number of use cases, right? The first is for the creation of environmental products, and we're going to go into that in a little bit more detail, given the focus of today's presentation. But the data can also be used for a number of other things. So it could be backing data for ESG ratings, could be for data that backs green bonds, green loans, and then other internal and external reportings. Say it's stating whether you achieved an ESG goal, maybe even for a national roll-up into NDCs and things like that. So you've caught this data at the source, and then that data doesn't just need to be used for, or can't just be used for environmental products, but there's a whole host of other reasons and ways you can use that data. And that's what All-Infra Climate is focused on. Next slide, please. So from an asset owner perspective, the platform's focused on allowing a party to collect data in a reliable way, and with that data, being able to use it across these use cases. So that's for reporting and compliance, for the monetization of that data through environmental financial product creation. Now the platform can take the data that's collected, can package it into renewable energy certificate or emission reduction in tokenized form that's then directly referenced back to the data from source, or the data can then be used with a traditional environmental financial product. And then, of course, the data can be integrated with existing accounting systems and risk regimes globally. Now, all of that is beneficial from the supplier side, but from the buyer side, so say you're a buyer that needs to buy environmental financial products to meet your environmental goals, the platform that's built gives you a better product, better underlying data, and products that are cheaper to transact in than in the traditional market. Next slide here. So we'll focus on the environmental financial product use case today. And we look at the problem set that exists in today's environmental financial product market. It's around 5 or so things, which are all sort of legacy issues to some extent. And one is the reliability of data from an underlying product. When was the product created? When was the data created? Where was it created? What was the asset? All those sorts of things. Then what is the quality and frequency and reliability of the monitoring process around the asset? Are you certain that if you buy a product produced by an asset that the underlying data hasn't been used for another sort of environmental product, either previously or at the same time? Is it going to be used in the future for a different environmental financial product? Can a technology solution be easily implemented without causing too many issues for the asset owner? And then finally, how can you minimize friction costs in the entire process from the creation of a product through the monitoring of an asset through to the retirement of that product? Next slide here. And so here we've sort of outlined how All-Infra Climate solves each of these issues. So on the data provenance side, we collect data at source. We work with some of the largest meter manufacturers in the world. So our technology plugs directly into SCADA systems or into the meter itself, collect data in real time. We have a full suite of verification tools that allow the asset owner and third parties to view and verify data that's been produced by that asset. Then because that data is linked to the end product, you have effectively a verified retirement. So any party can go in and see what has been retired in the past, what's been purchased in the past, and so forth, which allows you to easily audit what different users of the product have done from an implementation perspective, we can easily implement with existing technology. There's no edge device. It's a very simple deployment for the asset owner. And finally, the platform is full end-to-end. So we've tried to minimize the need for intermediaries at any point in the process flow. Now, intermediaries are needed for some reasons, for certification reasons and so forth in certain markets. But the platform is built to allow an asset owner to plug in the technology and a buyer to come and register, to purchase a product and to retire that product with as few intermediaries as possible. So if you have a look on the next slide, Hugh, this is a little feature list of what we have built. So you can see it's everything from connection to devices, recording of data in real time, through to verification tools, and then everything to facilitate buyer onboarding. So if you're a corporate, an institution, or an individual that wants to buy this product, we have the full platform that's been built out to accredit those buyers, do KYC, bring those buyers into the platform. And of course, we have all the geofencing that needs to apply, which is something that's quite important in this market, restricting the flow of product between different jurisdictions, given certain national boundaries and national requirements. That's all been built in at the product level. So I'll take you just through a quick tour of a very simple transaction of what we term a digital renewable energy certificate. So in this case, you've got maybe a renewable energy asset with a power meter attached to it. We connect into that meter directly, that data is collected, it's packaged up by our system, and it can then be purchased by institution, corporate, individual, and that party that can then do two things. They can either trade it, so they can trade it to somebody else on the platform, or they can retire it and then make a claim. So very, very straightforward, very straightforward system. I'm going to go through a little bit of detail on what the platform actually looks like. So everything that we've built, everything that I've talked about is in production, it's in operation, it can be used today. I'm going to go through a few screenshots just to give you a feel for how the platform works. So on this slide, what you'll see on the left-hand side is a simulated asset for a digital renewable energy certificate. So that certificate represents the environmental attributes of a kilowatt hour or megawatt hour of renewable energy. And so on the left-hand side, what you'll see is basic details about that asset, where it is, so the location details, nameplate capacity, amount produced to date, and so forth. On the right-hand side is a snapshot of a vintage. And a vintage is a series of tokens, so a series of digital renewable energy certificates that refers to a specific set of production data. So each series is tied to specific production data from a specific asset, which means that you can maintain the provenance of that data. So if I buy something from vintage number 2 and I go and retire it, I know that the data related from vintage number 2 is from meter reading X to meter reading Y. It was produced between day N and day O, and then I can go and retire that vintage. And I know that that vintage references that specific data. And every vintage is fungible amongst themselves, but not between each other, which means that you really, maintain the sanctity of that underlying data. Now, if you want to go and inspect that underlying data with our tools, you can. So if you go into the vintages, you can click on the contract addresses, and then through Blockchain Explorer, you can go down to the meter level and to the specific block level. So you can go into a block for a specific meter, and you can see what that meter reading was at any specific point in time. Now, obviously, there's various permissions here, and we have a permission chain solution, we have a public chain solution. But in the most public solution, you're able to go in and inspect down to the block level and down to the meter level on any particular asset. And you can see how that can be useful, not just from an environmental financial product perspective, but also just from a reporting perspective, either internally or externally. If you want to show an external reporting agency whether you've achieved your ESG goals, how much renewable energy you've used, and so forth, you're able to do that through this system. So the data, once it's captured, is able to be used in many ways, and it's able to be easily verified. And then finally, a couple of snapshots of the portal from the buyer's perspective. So we've got all the portfolio management tools for you to be able to go and manage your portfolio in environmental financial products. You can see what you've purchased, what data relates to those purchases, what sits in your wallet, what you've retired in the past. We've got dashboards that allow you to see by country, by asset, by time period, what you've purchased, what you've retired. So if you're trying to match consumption in a particular jurisdiction, a particular period, with the purchase of environmental financial products, you can do that very easily through our system. We've got a peer-to-peer trading platform that allows you to trade in a riskless way with no intermediary. And then finally, there's a verification portal, if you like, that allows you to see claims that are being made by corporates that are willing to make their claims public. So if a corporate comes and purchases environmental products, makes a retirement, they're willing to make it public, you can come in and inspect that retirement. So you can see everything from when they purchased the product to what vintage it relates to what data underlies that vintage, and when they made that retirement. So when you think about it from a corporate's perspective, it makes it easy for a third party to come and audit their claims, and it makes it easy for a buyer to go and to go and see what they've retired and when. So look, that's about all. We're plugged into some of the largest renewable energy assets across the region. We're making more connections every day. If you're interested in learning more about All-Infra, please reach out. Check out climate.allinfra.com. We're on LinkedIn, Facebook, Twitter, info@allinfra.com if you've got any questions. Thank you. I think you're on mute, Hugh.
Thank you very much, Dave. Appreciate that. Great presentation. And down to our last 10 minutes, Max. So over to you. If it's okay.
Hugh, I sent you an updated PowerPoint in both email and WhatsApp. So
okay, I'll do 1 second. Song. Got it. All right. Okay. Okay, you should be good, Max.
All right, thank you guys so much, and really appreciate the chance to share with you guys today. So we're at Carbonbase, and we are bringing data science and blockchain engineering to carbon management. Next slide, please. So we're based in Hong Kong at the moment, and to us, really, we see ourselves at the intersection of two really powerful waves. On one hand, we have a wave of technology, so the penetration of data science, IoT, and blockchain have really made it more readily available to actually handle and analyze large amounts of information and record and measure it. And then on the other hand, we have this enormous need to actually focus on our environment. And so we sort of see ourselves at the intersection of these two powerful trends. Skip to slide 4. So just really briefly about myself, I currently am venture partner of a Hong Kong-based family office where I've spent the last 2 years looking at blockchain investments. And before that, as I mentioned, I spent some time doing data analysis and also machine learning in Silicon Valley. I'm very fortunate to have gone through this short-term program in Beijing. And through that, I think really opened my eyes to the urgency of climate change as a problem area, as well as the need to actually mobilize everyone around the world to try to solve it. Carbonbase was informed by 2 experiences I had last year. One was going to COP25 and really seeing the the amount of public energy that was present actually and willing to sort of show up and do something in the climate crisis. And then also in January this year, going to Davos and seeing the global stakeholders really take a strong view on this space as well. So I think based on these 2 experiences, we really tried to build a project that can really allow the individual around parts of the world to participate in being carbon neutral and also reducing CO2. Next slide. So in terms of team, we're very lucky to have people who have spent a lot of time in enterprise. So Matt here has spent 18 years at Cisco. He was formerly the global head of IoT development for the company. And before that, he also ran several businesses for Cisco, including general manager of Cisco Saudi Arabia business. And then we also have people in product design. Jenny here is really, really authentically passionate about the industry. He spent a lot of time in financial advisory, but also has a really strong design and UI UX perspective. On the blockchain architecture side, we have Yuan, who lectures at Tsinghua on how to build a blockchain. He was the lead developer of a major public chain previously, and has been coming on board to help us design the backend infrastructure. On the data analysis side, we have a data scientist from Microsoft, Karen, and also we have Andrea, who's currently in Beijing and is helping us with China-facing business development. Next slide. On the global advisory board, we've really tried to build a list of people who have a deep background in both sustainable energy as well as government policy. So Louis Redshaw and Jacopo Vassetti have spent a decade plus each in carbon markets. Louis was formerly the managing director of Barclays and set up their carbon trading desk. Jacopo is one of the largest compliance market traders in the space. And then we also have professors from UST and as well as family office individuals who have really done a lot. Frank Wu is the head of blockchain for Ping An Technologies. And then also Rosa and Jason are very prominent people in the Hong Kong and Greater Bay Area ecosystem with deep backgrounds in the space. Skipping to slide 8. What we're building with Carbonbase, I think it's a compare and contrast with the two amazing speakers we had previously, Power Ledger and also All-Infra, is we're actually thinking a lot more about the individual retail participation. And this inspiration comes from the sense that, every person, I think to some degree knows that climate change is a problem, but very few people are doing something about it because they feel like, they don't really have a direct way to contribute. And so we're building an app called Carbonbase app. And the key idea here is to incentivize people to actually understand their personal carbon emission footprint. All of the daily actions we do, from eating to shopping to transportation, creates a little bit of emissions. And the key thing is, if every person in the planet just took responsibility for their personal tiny amount of emissions, we actually would be carbon neutral as a planet. And so that's really the fundamental core of our vision. So we have a calculator that helps people understand the footprint, and also an easy to use way to actually choose high quality offset projects to actually offset the footprint. Where we're using blockchain is actually building this universal public record. So actually we want people to be proud of their purchase decisions, and we want them to actually showcase that to other people as well. And finally, we're building a loyalty reward program to actually give people a small, carrot in addition to, the feel good aspect of being carbon neutral. We also want to give them some incentives to sort of do so. Next slide. Breaking down, where we're going with our platform, we really see 5 key components of making Carbonbase work. The first is actually a one-stop carbon calculator and offset tool. This currently exists. It's on our website. I'd love to have people come and try it out. The second is this idea of a unified green account. And here I think is really interesting that today a lot of the activities people do are actually completely separate from one another. If you're using Power Ledger to sort of plug in and generate local electricity, that's actually a completely different activity than if you are measuring how you eat your food. So we want the unified green account to actually be a place where each individual can actually record and plug in all of the different feeds about how they're actually becoming a more responsible citizen. The third is, once we have an account system set up, we actually want people to facilitate interactions between each other. And I think this is actually really key to drive a lot more people to actually participate and feel mobilized and motivated to do carbon lower emission activities. Finally, we have a digital blockchain, and that's going to record all the activities. So in the interest of time, I'm just going to quickly show you what we have made. So next slide. This is the user profile that's currently being generated. For each person, we have their name, their total emissions, as well as their current status, whether they are carbon neutral or they're not. And we also have a sort of social system. So as you refer more friends, we actually count the friends' purchases of offsets to you as well. So you can see how strong are you an influencer and actually bring more people to actually become carbon neutral themselves. Next slide. And on the rewards program, we actually are trying to build this rewards loyalty program that actually would make people want to become carbon neutral and sort of adding more vendor partners to that system every day. Really quickly, yeah, slide, on the project repository, sorry, slide 12. We are working with Go Standard and Vera actually as a source of highly accredited projects today. And we've been very fortunate to talk to a lot of different project developers, and we think that there's actually enormous amounts of interest for them to actually work with someone who can help them bring not only a sort of direct to corporate route, but actually have a lot more individuals come to actually purchase offsets from them. If we can just quickly skip to 14. Our inspiration comes actually looking at what happened in China recently. So this is Alibaba's Ant Forest. It is probably the world's largest consumer-facing, action app, climate change action app. And they have about 500 million users to date, and they facilitate the planting of about 100 million trees. So this is really, really inspiring in terms of what mobilizing power that individuals can do. We see ourselves as trying to build a multi-stakeholder version of this app. For all of its great qualities, the Ant Forest app is only on the Alipay network. It's only specific to Alibaba, and only Alibaba is actually paying for it. So we actually want to have more corporates, more individuals be able to participate in the system and actually sort of gamify the participation so that they also feel very excited. Finally, Ant Forest is only available in China. We think climate change is a very global problem. Just going to maybe slide 18. We currently have business models where we help facilitate the transaction of purchasing offsets. So from individuals and later enterprise, we can help them purchase carbon credits. And then I think the second phase of our evolution is really going to focus on working closer with project developers and actually seeing if there's ways to drive more individual and institutional interest to actually to build more offset projects where by having this strong demand, we actually be able to guarantee the offtake of the project offsets they actually produce. Final slide, slide 21. Looking to the future, today, the total number of people who've offset themselves are in the hundreds of thousands. This is a very, very small number. And ambition in Carbonbase really is to try to grow that number by several orders of magnitude over the next few years and really try to propel this going forward. So thank you guys so much for your time and attention. I'll leave my email in the chat and look forward to hearing from anyone who's interested. Thank you.
Wow, that's great, Max. I wish we had a few hours to hear you go all the way through that deck. So yeah, I look forward to going through it. It's fantastic. Thanks everyone for your time. So we're out of time. Jemma, I might just hand over to you for a quick closing.
Yeah, thank you. I'd like to thank our partner, Eva Law and her team at the Association of Asian Families, of Family Offices in Asia for partnering with us on this event. I'd like to thank our speakers, particularly those calling in from overseas and different time zones. I'd like to thank the audience and the team at the FinTech Association. It's a cross committee discipline that we're pursuing here.
Hi,
and I'd like to thank all those people who've contributed their time for helping us deliver this. We're working on our next event, which will be late September, probably looking more at data. And after that, we'll be looking at AI and analytics. We'll be looking at green bonds. We'll be looking at implementing Hong Kong Stock Exchange mandates. So there's a lot more to come. So keep an eye out for what else we'll be doing. And if you are in the FinTech Association and you want to be part of what we're doing, then just reach out. The more the merrier. Thank you, everybody, and have a great day.
Thank you, Jemma. Thanks, everyone.
Yeah, thank you, everyone.
Yes, thank you.
Bye-bye.